Okay, so let's do the note. So ordinary share capital, immediately you're going to go and draw a little line like this. Why? Because you have an opening and you have a closing. Okay. So now let's go look. You guys, it's important that you start to realize that they always give you headings. Can you see here, they tell you share capital. So here's all the information you need on share capital. The only other place you might find information is in the trial balance. Okay, so now they say, we have the authorized capital of $1 million. It's already printed. On 1st March, now I just want you to see, if I look here at the ordinary share capital here, you guys need to see that this thing is set up 29 February. So that means you can assume that is the closing balance unless they tell you it's the opening. You have to be aware of that. The other thing you also need to be aware of is when you look at this info, you assume it has been recorded unless they tell you it hasn't. Okay, being said, in this case, nothing of this is being recorded yet. Why? Because they gave you the opening balance. Is everybody shocked? If they gave me there a balance and one of these things was not recorded, it means that balance must take this thing still into account. It's all about the reading. Okay. Now, let's go look. On the 1st of March, my capital amounts to 2.4 million, which is already written there. But they say nothing about how many shares it is. Do you see that? Okay. So, I've got 2.4 million here. I'm looking for my amount of shares. 60% of the authorized share capital was in issue at the beginning of the year. What is authorized? $1 million. What is 60% of $1 million? 600,000. Next, on 31st March, we issued 200,000. So 200,000 issued, and they tell me it's at 5 rand. At 5 rand gives me $1 million. Then they say, 29 February, can you see it's the last day? The directors decided to buy back 100,000 shares. And we buy back at average, and we still need to calculate what is the average. Okay. And they say here, we buy it back at 575. No entry has been made. Okay. So now let's have a look. How am I going to calculate the average? I get the total rands, which is 3.4 million. I get the total units, which is 800. So that's going to give me 4.25. And 425 times 100 gives me 42500. Okay. And this one is an easy one because I'm just working straightforward like normal people do. I can promise you this is a paper from 2015, and this things only came into syllabus in 2014. Since then, we are reversing all the way. Okay, so make sure you understand this one, because if you understand this one, you understand the most basic way of asking it, and you'll be able to adjust. Okay, so this gives me 700,000, and this gives me, and if you do me a favor and you say 297 divided 700, you're also going to get that 425, because the average did not change, because can you see after the repurchase there weren't new shares issued. Okay, Now they want us to do the trade and other receivables. Can I ask you, in your retained income note, I see they don't ask retained income note, is that right?
They do.
Do they?
Yeah.
Oh, thank goodness. If I can just find my papers, my life would be better. Okay. So let's do the retained income before the trade debtors. So I'm going to have an opening balance. You just write open. You're not going to waste your time writing beautiful sentences. This isn't paper 3. So the opening, they tell me on my information that it's the 1st of March. So it's 410. Easy peasy, 1 tick. Now I say net profit after tax, which I calculated, if you remember correctly. Yes. I calculated it as that's 702. And that 702 is going to give you a bagel. Now I'm going to buy back. So I say 100,000 buy back, repurchase above average. And what you do is you do in brackets, you say it was 100,000 shares. What is above average? Let's quickly look. They say we bought it back for R5.75. Right? The average we calculated to be 4.25. So R1.50 is above, nay. So that gives me 150,000. Please have your bracket ready. That's going to give you 2 ticks. Sometimes they mark it like this. 1, 2, 3, 4. But the minimum it's ever counted was 2. Then I have my dividends. Now I see there, it doesn't look like there's enough lines. Yeah. So I just say dividends, and I do my total, and I block and I top, and I go and I say interim and final. Okay. So let's go look. The interim, they will always give to you in the trial balance. Most of the time. So if I look in the trial balance, can you see there's nothing there? If I look here, they say dividends. Interim dividend. Okay, so I talked very fast. Let me quickly explain. In my trial balance, when they give you a balance sheet section and a nominal section, you will see most of the time right at the bottom of the nominal section it will say dividends on ordinary shares. And that is not allowed inside your income statement, because that is your interim dividend that goes in your note for retained income. Why do they show it as a nominal? Because dividends is an expense. It's not an asset or a liability. Are we fine? Okay.
So
yes.
When is it ever an adjustment?
Yeah, here it is.
No, like is it ever an adjustment? Like it doesn't go to that.
Yeah, it's possible. Anything is possible. You have to be on alert. Ne? They can give you the total dividends declared and then a means to calculate the final dividends. Then you have to know that the difference is the interim. Okay, they can ask it any way they want. Okay, so always just be, that is why it's so important that you know your formats, back, forth, side, up, down, circled. Because you cannot spend time trying to find your format in your head. Because you have to find the information going into the format. That's your priority. Okay, are we awake? Here we go. So interim dividend was declared and paid on the 1st of August. Can you see the 1st of August is after the new shares were declared? Ne? Can you see that? The new shares were issued in March. So all my shares will get a dividend. So if I look here, who took my stuff. If I look here, the interim was declared here. So I'm going to work on 800,000 shares. How do I get 800? 6 plus 2. So I go, look, 6 plus 2 gives me 800,000. How many cents? 25 cents. And this, this goes where? Yeah, how much? 200. Dot. Okay. Final shares. What do they say about the finals? If I can find it, they say the final dividend was declared. The shareholders whose shares were bought back are not entitled to this. Can you see? If they just waited a bit, because they bought it back on the 29th, then they could still, if they sold it back the 1st of March, they could still get. But can you see the method behind the madness for the company? Okay. Because now they say, you don't have the share, you don't get the dividend. So now I'm going to work on the total right at the bottom, meaning the 700. So I say 700,000 times 25, 45 cents. No. And that gives me. So now I block and top 515. Now I just get my retained income the end of the year. 44. Everybody sharp. Can you see the retained income doesn't work with the tax at all? Because the retained income is about how much is shared towards the shareholders and how much is kept back for the company. Can you see it's basically, in this case, basically the same. We only increased it a little bit. Maybe we did that to take into account inflation next year. We did it according to inflation. Is everybody sharp? I see a lot of people very tired.
It's a Monday.
I know it's a Monday. I'm also tired. But we need to get these things in place, babies. Okay. So let's do receivables. For receivables, I have my debtors control. What? So here we go. So you don't have to write trade debtors. I see that's now a new tendency. But now remember, less provision for bad debts gives me net debtors control or trade debtors, accrued income, prepaid expense, net. And in this case, we already calculated SARS, income tax. They have to pay me back 23. Okay, so let's go. I see my, where's my stuff? My debtors control is 36. I calculated my provision for bad debts as 1,008. Can you see this is the new one? The new one. Okay? Which gives me, okay, accrued income. Let's go back to the calculation here. Accrued income was that interest on fixed deposit. Ne? You guys with me?
Yes.
And it's also the 70% of the insurance. What is the 70% of the insurance again? The 70% of the insurance is that part that the insurance is going to pay me out. But they haven't yet, which makes it an accrued income. Are we sure?
Yeah.
Okay, so I'm going to add the 28. And then I'm going to add, remember the 14,000. 70% of that the insurance will pay out. And that will give me how much? Let me finish this. It will give me how much? 9?
Wait, yeah,
9,800.
Yes, ma'am.
Okay. So
Wait,
this gives me, yes, you may
Where
ask.
does this rebate come from, Konja?
This is the interest on fixed deposit.
Oh, okay.
Prepaid expense was only the insurance
The 3,000.
of 3,500. And whatever total I get, I will immediately go and transfer it here.